The Australian dollar declined for a second straight day against the US dollar on Friday, as the greenback held its ground near two-week highs. A slightly hawkish Fed speak kept the USD supported, even as the market was pricing in a peak Fed rate of 5.17% in March, which is lower than the 5.5% previously. In other news, China's manufacturing and services sectors both expanded in January, adding to the evidence that the world's second-largest economy is recovering nicely from the pandemic. But the Aussie barely reacted, as the market had already priced in this good news. The focus now shifts to the release of US jobs data later today. A strong print would reinforce the case for further tightening by the Federal Reserve, which would be negative for the Australian dollar. Let's check out the key events and economic data releases scheduled for today, starting with US non-farm payroll data. This is a crucial event for the markets, as it provides insight into the strength of the US economy and the Federal Reserve's future policy decisions. A strong jobs report could lead to a hawkish shift in Fed policy, while a weak report might suggest otherwise. Next up is the release of the ISM manufacturing PMI data. This report provides a snapshot of the manufacturing sector's health and is closely watched by investors for signs of economic growth or contraction. A reading above 50 indicates expansion, while a reading below 50 suggests contraction. Finally, we have the release of the FOMC minutes. This report provides insights into the Federal Open Market Committee's discussions and decisions regarding monetary policy. Investors scrutinize the minutes for clues about the future trajectory of interest rates and the overall policy stance. Now let's take a look at the technical outlook for the Australian dollar. On the daily chart, we can see that the currency pair is consolidating within a downtrend channel. The 50-hour moving average is providing resistance, while the 200-hour moving average is offering support. In the short term, the momentum indicators are neutral, suggesting that the market is uncertain about the next move. However, the overall trend remains down as long as the price is below the 50-hour moving average. In terms of key support and resistance levels, the next resistance is at the 50-hour moving average, which is currently at 1.068. The next support level at 1.063, followed by the 200-hour moving average at 1.061. So what can we expect going forward? Well, if the jobs report and ISM data come in stronger than expected, we could see the Australian dollar decline further, as this would reinforce the case for a more aggressive Fed tightening. On the other hand, if the data disappoints, the Aussie might find some support, as it would raise hopes of a Fed pivot. However, the upcoming FOMC minutes could put a lid on any potential gains for the Australian dollar, as a hawkish Fed is likely to keep the currency under pressure. As always, keep an eye on the key events and economic data releases. And if you want to learn more about day trading, be sure to follow for more updates. Thanks for watching, and I'll see you in the next video.